Is Summit Midstream Partners a risky investment? That's the question we're diving into today. Over the years, the company has been a rollercoaster ride for investors. Its stock price has plunged 94% in the last 5 years, making it a nerve-wracking venture for those involved. Despite being in the resilient natural gas business, Summit Midstream Partners hasn't been immune to the harsh realities of the financial world. The company has underperformed the market this year with a 14% decline. This is in stark contrast to the 9 and 13% gains made by the S&P 500 and the Energy Select Sector Spider Fund ETF, respectively. To add to the woes, the company has also suspended its dividend, leaving investors with less to look forward to. Its mediocre operating performance, weak balance sheet, and excessive debt have all contributed to the perception of Summit Midstream Partners as a risky investment. With such a turbulent financial history, it's clear why some would see Summit Midstream Partners as a risky bet. But is there more to the story? To understand the risk, we need to take a look at the company's financial history. We begin our journey 5 years ago. Summit Midstream Partners was a company that promised potential, but the reality, unfortunately, was much different. Their operating performance was, in a word, mediocre. They struggled to fully utilize their assets, leading to inefficiencies that began to weigh heavy on their balance sheet. As we move forward in time, the financials didn't improve. Their adjusted EBITDA, or earnings before interest, taxes, depreciation and amortization, took a hit. They lowered their guidance, a sign that the company's performance was not meeting expectations. This was an indicator that investors needed to buckle up for a bumpy ride. The red flags didn't stop there. The company also reported losses per share, a sign that the company's profitability was in question. A profitable company usually means a healthy company. And in this case, Summit Midstream Partners was showing signs of financial sickness. The debt. Oh, the debt. It was, and still is, excessive. When a company has high levels of debt, it means they have to use a large portion of their earnings to pay off this debt, leaving less money for investors. In the case of Summit Midstream Partners, this debt became too much to handle, leading them to suspend dividends. For investors, this was a hard pill to swallow. And then there's asset utilization. A company's efficiency can often be measured by how well it utilizes its assets. In Summit Midstream Partners' case, they suffered from low asset utilization. This means they weren't efficiently using their assets to generate profits, another blow to their financial health. This financial rollercoaster ride certainly paints a picture of risk, but it's also important to look at the industry as a whole. The natural gas sector, where Summit Midstream Partners operates, has its own set of challenges and opportunities. It's a business of resilience, as it's often less affected by price fluctuations compared to other fossil fuels. This resilience, however, doesn't shield the sector from inherent risks. Let's delve a bit deeper into the dynamics of this industry. The Biden administration, for instance, has been granting more oil and gas drilling permits on public lands compared to the Trump administration. This move seemingly contradicts Biden's campaign promise of no more drilling on federal lands due to climate change concerns. However, it's important to note that legal constraints have limited Biden's ability to curtail oil and gas development on public lands. What does this mean for Summit Midstream Partners? Well, increased drilling could potentially lead to an uptick in the demand for midstream services, which is good news for the company. However, this also comes with increased scrutiny and potential regulatory risks, considering the current administration's stance on climate change and sustainable energy. Moreover, let's not forget that Summit Midstream Partners is grappling with a weak balance sheet and excessive debt. These financial difficulties have led to the suspension of its dividend and a significant plunge of around 94% in its stock price over the last 5 years. But it's not all doom and gloom. The company operates within the natural gas business, which, as we've mentioned, carries a certain level of resilience. This resilience could potentially enable Summit Midstream Partners to weather the storm and bounce back. However, it's equally important to understand that this resilience doesn't make the company immune to the risks prevalent in the sector. So while the sector has potential, the risks cannot be ignored, especially when it comes to Summit Midstream Partners. So, is Summit Midstream Partners a risky investment? Let's recap. The company's financial history reveals a tale of underperformance, with a significant decline in stock price and a suspension of dividends. Coupled with a weak balance sheet burdened with excessive debt, the financial outlook seems bleak. From an industry perspective, while the natural gas business is generally more resilient than other fossil fuels, it's not immune to market fluctuation. The industry is also entangled in a complex web of geopolitical and environmental issues, adding another layer of uncertainty. Summit Midstream Partners certainly has its challenges. It's navigating a tough industry and grappling with financial instability. While there's potential for turnaround, it's a long road ahead. There's no denying the significant risks involved here. While the decision ultimately lies with the individual investor, it's clear that Summit Midstream Partners carries significant risks. As always, it's crucial to do thorough research and consider your own risk tolerance before making any investment decisions. Remember, if you found this video helpful, don't forget to hit the like button and subscribe to our channel for more investment insights. Until next time, invest wisely.